Hey, good morning, everyone. So, just wanted to give you a quick video here on natural gas. We're in a long-term downtrend, but we're in a 3-month uptrend, and um, we always trade the far right edge of the chart. So, when I do my swing trading, those are trades that last 2 days up to 20 days. I'm looking at the 3-month chart, and so we see we're in a great trend here to the upside. What I'm waiting for now is a pullback to test the breakout area here at 1407 area. And once we get that, we're going to have a bull flag setup. That's where we see a higher low after making a higher high. So this high over here is clearly higher than the high we had over here. And so what we'll look for then is the higher high, which we've already got, and then a higher low. So the higher low would be something above the low here at 1375 or the low at 1350 area. And once we get that and we see a bullish candle, then we'll have what we call a setup, and that's what the chart looks like just before entry. And so this is an example of something that we're going to be able to have a setup on. It could be a few days, could be it might be a week, but we're going to see a setup on this, and I'm going to definitely take advantage. And for anyone who's a member, you're going to see that opportunity as well and be able to take advantage. You can buy UNG, that's the natural gas ETF. You can buy shares in the ETF. Right now, they're $15 a share. But what I prefer is trading options. That gives me the right to buy the shares if I want to, but I don't have to. And the worst case scenario is when I buy an option, the most I can lose is what I pay for the option. So as an example, I would not be buying this today because it would be chasing it. It already broke out a horizontal resistance. So now we have to wait for that pullback and get a better price. But bottom line is, if I went to buy the $15 call option on this, I'll go to the trade tab here. We see that by December 19th on these monthly options, we have an expected move of $1.98. And so if I was to go buy the $15 call option right now, I would be paying anywhere between $1.18 per share. Each contract is 100 shares, so $118 up to $123. Usually the price I pay is the middle between those. So let's say $1.21 or $121 a contract. And so if it goes up those $2 and it does that in the next couple of weeks, which is highly probable, then the amount I invest on that option contract is likely double or maybe even more. So in any event, this is what we're teaching people. Options are a way to use our capital wisely without taking as much risk. Again, the risk on this is what you pay for the option. So if it's $121, that's your maximum risk if it goes to zero. But we always put stop losses in. So if it doesn't go the direction we expect, we get out with a small loss. But if you were to buy 100 shares on this, it would be $15 a share or $14.99 right now. So $1,500. And if it goes to zero, you lose $1,500. I'd rather lose personally $121 than $1,500. So it's just a way to be more efficient with our capital. We just have to know that when we place a trade, we have to understand what our target is, what the time frame is. And that's what I'll be teaching, technical analysis. So right now we're seeing a pullback in the market. I've been, speaking on that in the past few weeks with volatility. Volatility is trending up, and when volatility goes up, markets come down. So I would certainly not be panicking. We're still in a long-term and a short-term uptrend, but we're seeing a pullback, and that's to be expected. So what I would hope for is a 2 to 4 week pullback, and then we're going to get some really good opportunities. We have a trading plan specifically for that. And so we'll be teaching on that as well. So anyways, hope you guys are getting some value out of this. God bless.